Some market commentators argue that Palantir stock could face a significant downturn in 2026. This viewpoint is shared purely for educational purposes, and while I personally do not agree with this bearish interpretation, it is still important for investors to understand opposing arguments. Being aware of both bullish and bearish narratives allows investors to evaluate risks more clearly and make better informed investing decisions rather than relying on hype alone. The foundation of this bearish argument starts with Palantir's extraordinary rise. According to critics, Palantir technology stock has reached levels that appear detached from traditional valuation logic. The shares currently trade at a market capitalization that exceeds 100 times the company's trailing revenue, a valuation multiple that places Palantir among the most expensive publicly traded businesses on the planet. At this valuation, Palantir is ranked as roughly the 22nd largest company globally by market value, a remarkable position for a software analytics firm that only recently achieved consistent profitability. Adding to this concern is the sheer magnitude of the stock's rally. Since 2023, Palantir shares have surged well over 1,000%. Bears argue that this explosive move has been driven largely by enthusiasm surrounding artificial intelligence rather than purely by fundamentals. As a software and analytics provider serving governments and large enterprises, Palantir has become a poster child for artificial intelligence optimism, riding the wave of excitement that has lifted many technology stocks to extreme levels. Because of this rapid ascent, skeptics now describe Palantir as potentially one of the most expensive stocks available today. After multiple years of growth fueled by artificial intelligence excitement, critics question whether the stock can realistically maintain these heights. The key concern is whether Palantir's valuation can withstand even a modest slowdown in growth once 2026 arrives. To explore this idea, analysts often begin by examining the company's recent growth metrics, which help explain why so many investors remain enthusiastic. In the most recent quarter, Palantir reported that revenue from the United States increased by 77% year over year, reaching $883 million. This impressive figure was driven primarily by explosive momentum in the company's commercial segment. Revenue from United States commercial customers surged by 121% year over year, demonstrating strong demand from private sector enterprises adopting Palantir's platforms. Looking further into the future, Palantir's contract pipeline also appears robust at first glance. During the same quarter, the company finalized $2,760 million in future contract value. This represented a 151% increase year over year, suggesting that customers are committing to longer-term relationships and larger deal sizes. Bulls view this as evidence that Palantir's technology is becoming deeply embedded in customer operations, while bears acknowledge the strength but question its sustainability. Profitability is another area where Palantir has delivered strong results. The company posted a generally accepted accounting principles operating margin of 33% during the quarter, a level that has steadily expanded over several years. This margin expansion has translated into substantial cash generation. Over the trailing 12-month period, Palantir produced $1,790 million in free cash flow on $3,900 million in revenue. For a company growing at this pace, these figures are undeniably impressive and are often cited by bullish investors as proof that Palantir is no longer just a growth story, but also a profitable enterprise. However, bearish analysts argue that this success sets the stage for future challenges. Palantir has rapidly evolved into one of the largest software analytics providers in the world. The company works closely with the United States government and with a wide range of major enterprises across the country. Based on the volume and frequency of contract announcements, it can feel as though Palantir is signing deals everywhere. In the most recent quarter alone, the company closed 204 contracts, each valued at $1 million or more. While this level of deal activity demonstrates strong demand, skeptics argue that it may also create a difficult comparison base in the years ahead. When a company delivers such exceptional growth and deal volume, maintaining similar growth rates becomes increasingly challenging. By the time 2026 arrives, Palantir may be comparing itself against periods of unusually strong performance, which could make growth appear to slow even if the business remains healthy. Another core element of the bearish case revolves around market size. Global spending on analytics software is estimated to exceed $100 billion per year. On the surface, this figure suggests enormous opportunity. However, critics argue that this headline number significantly overstates Palantir's true addressable market. The company operates primarily in regions aligned with the United States, which limits its ability to expand globally in the same way as other software providers. Additionally, the analytics and enterprise software landscape is intensely competitive. Numerous well-funded companies are vying for the same customers and budgets. Bears argue that Palantir will not capture the entire analytics software market, nor should investors expect it to do so in the near future. As competition intensifies, pricing pressure and customer churn could eventually weigh on growth rates. The discussion then turns to the trajectory of Palantir's revenue growth. Beginning in 2025, the company's revenue growth accelerated meaningfully as artificial intelligence spending surged across both government and commercial customers. Critics believe that this acceleration may represent a peak rather than a new baseline. By 2026, Palantir will be lapping these elevated growth rates, making it more difficult to deliver eye-catching year-over-year comparisons. In the most recent quarter, consolidated revenue growth reached 63%. Bears argue that this figure is unlikely to be sustained indefinitely. Instead, they suggest that growth could slow back toward the low double-digit range at some point during 2026. Even a gradual deceleration, according to this view, could have an outsized impact on the stock given its current valuation. If revenue growth begins to slow materially, critics believe the stock could experience a sharp correction in 2026. High multiple stocks often rely on continued rapid expansion to justify their prices. When that expansion slows, valuations can compress quickly. Even if an outright crash does not occur, skeptics argue that Palantir shares appear dramatically overvalued for investors buying at today's levels. At present, Palantir carries a market capitalization of approximately $426 billion. This valuation does not yet account for potential future shareholder dilution from stock-based compensation. Based on current revenue, the company trades at a price-to-sales ratio above 100. According to bearish analysts, this valuation implies extraordinary levels of future revenue growth, along with significant expansion in profit margins. To highlight the challenge, critics often present an optimistic hypothetical scenario. Even if Palantir were able to increase its annual revenue 4 times over to $16 billion and simultaneously lift profit margins to 40%, the company would generate bottom-line earnings of $6.4 billion. Under these assumptions, the stock would still trade at a price-to-earnings ratio of roughly 66.5, a level many consider unsustainable for a mature business. In the final analysis, bears acknowledge that Palantir stock could continue moving sideways or even higher if artificial intelligence spending remains strong throughout 2026. However, over the long term, they argue that the math simply does not support the current valuation. From this perspective, the gap between Palantir's financial potential and its market capitalization is too wide, setting the stage for eventual disappointment among investors. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.